Dear viewers, over the long weekend we saw that US futures hit new all-time highs. Bitcoin and the rest are still taking their time. What happens next? What's on the agenda this week, including economic news from the US, and whether the spotlight will remain on US heavyweights or slowly but surely shift back to Bitcoin and altcoins. I'll be discussing exactly these topics over the next few minutes with Oliver Michel from tokentus. Great to have you here, Oliver.
Hi, Joanna.
All you have to do is say hello, it throws the audience off. Let's talk about the good news, or rather the early signs, so to speak. We just heard it a moment ago. In the US, the major indices continue to perform at an all-time high. Futures have hit new all-time highs, but Bitcoin and altcoins aren't quite keeping up. When will that happen, and will it happen soon?
Yeah, Joanna, well, it's a good start that Bitcoin has fallen back to the support level we saw at $76,000 and hasn't broken through it downward. That's already a first positive sign. Now, if we get more positive news regarding the US-Iran conflict, then that will certainly give Bitcoin and the altcoins trailing behind it a boost. And if, last but not least, the best performers release a bit of liquidity from the Nasdaq, which then rotates over into our risk-on assets, which of course include our cryptos, then I can well imagine that our coins will make up some ground and catch up with the major US indices. And as for how that might play out over time, we'll take a detailed look at that today, right at the end of the interview.
Impatience is growing. Let's take a look at the FedWatch tool. We heard that Kevin Warsh was sworn in as the new chair of the Federal Reserve last Friday. He now, of course, has a tough legacy to deal with. On the one hand, inflation, on the other, interest rate policy, and of course, not least, the demands of the US government, or rather those of Donald Trump. How has this, if at all, affected the market's expectations of the Fed at the moment?
Yes, it's just as you say, it's an incredibly heavy burden to bear. I'm curious to see how he'll approach this and how he'll manage to resolve it above all. So as you can see here on the FedWatch tool, this reflects the market's view of how inflation has developed over the past few weeks. The assumption is that for now, everything will stay the same over the course of the year. And it's also assumed that starting in 2027, things will start moving in the wrong direction. Not in the sense of a rate cut, but rather an increase. And that, of course, is completely at odds with what Donald Trump has been demanding, not least from Jerome Powell, and I suspect indirectly and secretly behind closed doors from Kevin Warsh as well.
Maybe it wasn't so quiet after all. Things had gotten pretty loud at Powell's place toward the end. We already saw positive quarterly results from Nvidia last week. Once again, they exceeded expectations. This means the tech giant's strong performance continues, and as a result, we're naturally seeing the Nasdaq and major US indices continue to trend upward. This has, of course, provided further momentum for the markets. However, we also have, though as of yet unconfirmed, at least the hope that progress is finally being made in the Iran conflict. We saw, and you've already mentioned this on the crypto channel, that Donald Trump stayed at the White House over the long weekend, contrary to his original plans, so that negotiations could continue. He cancelled various appointments, including his own son's wedding. That is to say, there are reports of progress in the negotiations. This hasn't been confirmed. But what we saw over the weekend, or rather what we saw yesterday and again this morning, is that the price of oil is falling. When the price of oil falls, there is naturally a glimmer of hope that the Strait of Hormuz will soon be opened, and consequently that an agreement will be reached between Iran and the US regarding the nuclear program. We've seen this before, all this positive news that hasn't been confirmed yet. The question, of course, is when will we get confirmation? How quickly will things move forward then? And we're hoping for soon, of course, maybe even this week, but there's also some US economic data coming out this week.
Yes, it's exactly as you say. The news situation keeps fluctuating, sometimes good, sometimes bad, sometimes confirmed, sometimes unconfirmed. What I always keep an eye on is the price of oil. When it goes up, you know that's not a good sign. And when it drops as sharply as it did over the weekend, you know there's obviously something substantial behind it. And then you can hope, because that's the big highlight of this week. How will these negotiations turn out? And the second big highlight of this week is this coming Thursday. That means we'll have the PCE data next Thursday. That is the inflation figures and the producer price index. And for April, the PCE is expected to be 3.8% and the core rate 3.3%. So those are pretty high figures. And on Thursday, we'll also get the gross domestic product figures, which will give us an indication of economic growth. The second estimate for the first quarter, the initial estimate was 2.0, and the previous quarter's figure was 0.5. So things have improved, but it wasn't exactly great, and we'll be keeping an eye on what happens on Thursday. So things could get volatile if this inflation data is confirmed or even rises slightly on the one hand, and on the other hand, economic growth doesn't hit 2.0 but comes in at 1.9 or 1.8. Then we have a countervailing trend, GDP down, inflation up, and those are the first signs of stagflation. So economic growth is stagnating and declining, and inflation is rising, and that usually leads to uncertainty. And uncertainty leads to volatility at the end of the day, but we know we're at the end of this entire cycle, and I have two figures here to back that up. As for the CPI, that is the Consumer Price Index, we saw the data from the week before last, 3.8%. Whenever the CPI has been around 3.8%, we've had a major crisis. That was the case when the dot-com bubble burst, and it was also the case during the financial crisis of 2007, 2008, and 2009. Back then, it was at that level, which is exactly where we are right now. And the other thing that's been popping up all over the news lately is the interest rates on 30-year US Treasury bonds, 5.8%. The last time 30-year US Treasury yields were at this level, 5.18%, we hit the peak of the S&P 3 months later in 2007 and 2008, and then we fell into a massive bear market. That means there are two red flags here that could confirm what we always say. Yes, we're going to see another massive upward move toward final all-time highs, and after that, there's a strong case to be made that we'll enter a bear market coupled with a recession, specifically when GDP comes in correspondingly low. So, in that regard, there are a lot of exclamation points here. Caution is advised. Things won't stay this way for much longer.
Well, GDP, gross domestic product, has been revised relatively frequently in recent times and significantly downward.
But as we mentioned on our channel, we had a major article in the Wall Street Journal this week. They confirmed exactly what we said. They wrote that the stock market is celebrating partying like it's 1999 during the internet and telecommunications boom on the one hand, and on the other hand, consumers are moping and don't know how to make ends meet. Huge article. Exactly what we've been discussing for weeks and months, this divergence between the US market and the country's real economy. So this seems to be getting more and more confirmed, and we'll see if we're right at the end of the day, how many more months this will hold up before we enter the rollover. And as for the rollover and what something like that might look like, we'll, as mentioned at the beginning, discuss that in detail again at the end.
Right now, the party is definitely still going strong. You can really see that on Wall Street in the US. We saw the Dow Jones climb above the 50,000 point mark last Friday. As for the Nasdaq, as I just mentioned, Nvidia's earnings were fantastic. They beat expectations, and tech stocks are naturally celebrating that too. Here too, you can see a clear upward trend. The question is, of course, as you've said time and again, that when something is pushed up this much, it's only a matter of time before it can't keep going like this. However, that's also a phrase that's been said often in the US, but also here in Germany. This can't go on much longer, and yet it kept going and going and going.
Yeah, but of course the ice holds you up even when it crunches. But once the market crashes, it's too late. There's no getting out of it. And that's why we're happy about every week and every month when the market goes up, because that means our portfolios go up too, but we have to be careful because it could crash at any moment. And the Dow hit another all-time high on Friday, as you already mentioned. while the S&P and Nasdaq have been hitting all-time highs constantly. The Dow rose on Friday back above 50,000 points, around 50,600 or so, hitting its all-time high. And as you mentioned, all US futures on the US indices hit all-time highs yesterday, Monday. So that means that when the market opens over there today, we can definitely expect some movement. So what does that mean for our Nasdaq? We had said, sure, we had an upward trend, we had a major correction, and then it went on this steep upward trajectory. And I had said that this was the final upward move, and I had hoped for a correction, a controlled correction. And if you look at the Russell right now, you'll see, and maybe this has already been a correction, admittedly not a big one, not a particularly significant correction, but you can see here that the RSI has gone down, has dropped significantly, and could now be on its way back up, especially if another massive green candle forms today and the market continues to rise. So from that perspective, maybe that was the correction, and we're now truly in the absolute final leg of the uptrend. So the Nasdaq is on its way to a final all-time high. There's no question about that in my mind. The moment that correction happens, this little dip down here, then we'll have to adjust our target range. Then 30,000 won't be enough. Then we'll have to aim for 31,000 or 32,000. Then things will really take off. Ultimately, that is also subject to S&P. As we always say, the S&P and Nasdaq tend to move more or less in step. As for the S&P, you could say it's had 8 consecutive weeks of gains. That's happened exactly 20 times in its history, ever since the S&P was created. So we've definitely seen something special over the past 8 weeks. As you mentioned at the start, Nvidia's earnings are giving the whole situation a boost, confirming this trend, and so it will be interesting to see how things play out from here, whether this really is the final. Put it in the 30, 31, 32 range, maybe even as high as 33,000. That happens really fast by the end of the day, because 1% on the Nasdaq is, 300 points. And 2% is 600, so you reach that level pretty quickly, and that's where we want to be. But then, as I said at the beginning, all the signs point to the fact that the crunching ice might actually get so thin that you fall through.
You're laughing now. We've seen that the Russell, which essentially represents riskier stocks and companies because it's broader and somewhat smaller, and thus serves as a sort of gateway to riskier investments, such as the crypto market. The Russell has hit a new all-time high. So here too, we can see that things are gaining a bit more momentum. The question, of course, is this already the first sign that the euphoria is spreading a bit further into the broader market from the major US indices?
Yes, definitely since that move. So we see the somewhat flatter rises and the somewhat steeper rise beyond the all-time high. So that was already an insight we gained in this area when we said that liquidity is slowly flowing back into the broader market. But of course not to the extent that it has flowed into the Nasdaq and S&P. But what's really clear here is the analogy to the Nasdaq. I already hinted at this earlier. We're seeing a much larger correction in the Russell here, as indicated by the red arrow. A correction, as you can see here, that was the last all-time high. It hit this level once, then hit it again, so it used the last all-time high as support and bounced back up accordingly. And you can also see down here on the IRIS-E, the downward move, the sharp drop followed by the recent rally. So if you now compare the Nasdaq and the Russell, you can definitely say about the Nasdaq that this might have been the correction, because here it looks like a clean correction on the way up and the final leg to the all-time high. That means we're in the same spot as last week. Liquidity has become widespread. We're waiting for the top performers on the Nasdaq and the S&P to release some liquidity and in effect continue to drive up the Russell and our cryptocurrencies. A rotation of liquidity from the top performers to the broader market. But I can only repeat myself, like a broken record. The rollover is just around the corner, in a few months. We have provided the rationale for this structural divergence from the US market in connection with stocks on the one hand, and the current economic situation and the hardships faced by consumers in the United States. Markets versus the economy is the headline, and this divergence is a typical feature of the late stage of a cycle, and that is precisely where we are right now.
Before we turn our attention to Bitcoin and altcoins, let's take another look at the strength of the dollar, or rather the dollar's performance relative to other major global currencies as measured by the DXY. And here we have the weekly chart. The chart shows that the trend is moving downward rather than upward. Of course, one person's gain is another's loss. We'll take a closer look at that in a moment. But of course, we're also keeping an eye on what the oil price actually means right now. Let's start by talking about the chart. You've plotted the DXY here and drawn an orange line against it, which, as we can see, usually moves in the opposite direction.
Yes, that's Bitcoin, the orange line. And we saw that we actually looked at this chart 3 weeks ago when we said, okay, the DXY is falling from its all-time high and Bitcoin is rising. So this inverse relationship is clearly visible, at least in broad terms. We had said at the time that the dollar was expected to fall to around 96. So the D2 is supposed to fall. It doesn't work that way. The dollar relative to several currencies. And the goal has been achieved. That was wonderful too. As a result, our Bitcoin price went up as well. It went down, it went up. So in that sense, this counter trend is also evident on a smaller scale. And what we naturally expect now, hopefully in conjunction with the de-escalation of the US-Iran conflict, is that the DXY will continue to fall in the short term. So I set a target of 94 to 95. That would be a move that's already starting to show signs of happening here. And I've marked the target here at 94 to 95. And that would be the time frame, this drop, that could be utilized for Bitcoin because, well, we know a strong dollar, high interest rates, whether those are short-term rates, which are of course set by the Fed, or whether they're long-term rates, such as those based on 30-year US Treasury bonds, Fed, or whether they are long-term rates, such as those based on 30-year US Treasury bonds. Whenever the dollar is low, whenever the dollar is high and interest rates are high, that creates serious competition for our stock and crypto markets. You just have to look at it that way. That's why it's important for the dollar to fall, for the DXY to fall, and that's the opportunity for our cryptos to, over the next few months, make some headway, make up for a lot, and deliver strong performance. And then I assume that, as the green arrow here suggests, the DXY will rise again because with Kevin Warsh at the helm.
Kevin Warsh is known for advocating a strong dollar, so he'll likely use the Federal Reserve's tools accordingly, while Donald Trump, on the other hand, sees things differently. He would, of course, prefer a weak dollar, as you just mentioned, because that would naturally make the stock markets more attractive. And so there are two people or two men in high positions with differing opinions facing off against each other.
Yes, the question is, how is Kevin Warsh going to pull this off? We already touched on that earlier. As you just said, Kevin Warsh advocates a more stable and stronger dollar policy, so he wants the green arrow. There's no question about that at all. He also doesn't really want to make any major changes to interest rates. He had already said beforehand, probably anticipating what might be in store, that he expects a dramatic surge in productivity driven by AI. In other words, productivity will be so high that inflation will remain under control, allowing interest rates to be lowered. That was his point. So he started saying weeks and months ago, well, I'm actually in favor of high interest rates, but in this specific case, with this AI-driven productivity boost, we could afford to lower interest rates. That means I can well imagine that in the short term, does what Trump wants, namely, on the one hand, ensures that the dollar falls. Sure, a falling dollar naturally means that US products become cheaper, so more US products can be sold on the global market, and US companies generate more revenue and more profit on the one hand. And on the other hand, the moment interest rates are cut, that gives the US economy an additional boost. So in the short term, I can imagine that things are on track, and once the midterms have been won and everything is potentially under control, that will then slowly
Is raising interest rates again.
one that brings interest rates back to an appropriate level and brings the dollar back to an appropriate level as well. And I expect the dollar to rise well above 100 when it starts to climb again. So we'll see another brief dip and then
The DXY.
a massive upward move with the DX2 going up. That's how I picture it, and it fits with our cryptos, and that's how Trump and Walsh could act in harmony if you separate the short term from the long term, and that could actually work out quite well in terms of the argument.
Well, with Paul, things didn't quite turn out the way Trump had imagined. We'll see. But for now, let's take a look at Bitcoin. The $80,000 mark is a stubborn resistance level that Bitcoin can't seem to break through right now. On the other hand, the support level at $76,000 hasn't been broken either. So that means we're still in this testing phase that's putting us all to the test, right?
Yes, 109 days. Under the main heading, classifying and forming soil. So was that the lower low, or will it go even lower? That's the key question. If it doesn't go any lower, then the bottom has been formed. And what's turned out, Johanna, is the range. We always say the range around 80,000 is a pretty critical range. We said that from the very beginning when we entered that number here at this point, relatively early on in this sideways movement. That's going to be a hurdle. And it stayed in that range for 10 or 11 days, fought hard, then lost the battle and went down, correcting over the last 2 weeks. And as the weekend approached, it fell back to the support level we had identified, namely the area around 76,000. It did dip below that level briefly, but you have to keep in mind that it was the weekend, and the weekend means, well, low liquidity. The markets are tight, so market makers can target liquidation clusters relatively quickly and take out the longs first and then the shorts. You could actually see how it went down and then back up again in a very short time. That's why I don't view this downward spike as a break below support, but rather as never mind. You can see very clearly that we've stayed at 76. That's where we are right now too. I think 76.6, give or take. And now the question arises, and that's the most important thing here on this slide. This red line is really, in my view, quite crucial. The moment it touches down here and starts moving up and makes another run at the 80,000 level, there's a certain probability that it could break through with all the momentum currently in the market. On the other hand, if it doesn't hold the level around 76 and drops to 75, 74, 73, then we know it's going to go down again. Yes, in that case, it's still unclear whether a bottom will form. That raises the question, will a bottom form here in this range between 60 and 76? Or if we really have to bite the bullet, we might have to go below 60 again. That means here in this area with a lower low relative to that, we'll see, but I'm assuming that the 76,000 mark is now a crucial. The key level is the one where a downward or upward move occurs. And I think that will be decided relatively soon. So we've put together a summary here, down to a maximum of 60, maybe even a tiny bit further if it goes down, and the path up. It has to break through 80,000, 81, 82. It was already almost at 83 here at the peak. This is the second attempt, and then it'll just keep going up. So this isn't the final hurdle. There are still a few other hurdles it can clear, and then we'll see how far this mini relief rally might develop into a proper relief rally, up into the major retracements, into the key retracements, and eventually if there's enough momentum, maybe even up into the all-time high range and perhaps even beyond. But it's all one step at a time. We'll see now how the support at 76,000 holds up and whether it goes up or down, and then we'll have to position ourselves accordingly. That's right.
Let's take a look at Bitcoin on the weekly chart. It posted a slight loss last week. Has anything changed at all in the overall picture of the weekly chart, which, according to you, is the most important one right now?
Yeah, it has. It's turned a little red, unfortunately. Yeah, we've had 2 red weeks, and this week, the 3rd week, is starting off red too. So you can see that up here too. Man, you can also see how the RSI has dropped, which is actually a good thing because we don't have much room left to move up toward that red line, which represents the upper limit of the RSI's movement until the rollover. We discussed the overall situation in detail last week, specifically regarding the MACD. We know that when both lines, the MACD line and the signal line, are below the 0 line, the long-term outlook is bearish. And you can see that here, that's the downward movement. And if the histogram is above the 0 line, meaning it shows green bars, then the short-term assessment is more bullish. And you can see that in this movement here. And this combination always indicates a possible trend reversal or a bottoming process. But as I just mentioned in the daily chart, the bottoming process simply isn't complete yet. We don't know exactly, will it break through 80 or fall below 76? That's the crucial question right now. Once that's answered, then we'll have much more clarity here. But that's the situation right now. It's a crucial question, but it's not the decisive battle. It just indicates what the next big move might be. Because it's clear that even if it drops below 76 and stays above 60, it could still launch another relief rally from there. It'll just take longer.
Of course, the current state of confidence in Bitcoin can also be gauged to some extent by ETF inflows and outflows. What has been happening there? The news hasn't exactly been positive lately.
That's right. So after a really bad penultimate week, comes an even worse final week. The spot Bitcoin ETF saw an outflow of 1.26 billion last week. That's a really big number, one that at first glance is cause for concern. We've already posted on the channel that Sentiment has shared an analysis. Sentiment is a company that conducts blockchain analysis, and they found that whenever outflows increase significantly, it means Bitcoin is on the verge of an upward move. The logic behind this is investors are scared, retail investors are scared, and nervous hands are selling off those coins. So we're on the verge of a bottom forming, coupled with an attractive price that will then attract new investors who will become buyers and drive the price back up. So Sentiment views the development of spot Bitcoin ETFs quite positively. I'd like to agree with that assessment and see how things look over the next few days. But there's some truth to that logic because that's exactly how the stock market works. When fear is at its peak, you're very close to the bottom, and once you hit bottom, things just start going up again. And that's actually a positive sign. I don't want to sugarcoat everything all the time, but that's why I'm saying this. It's not my opinion, but sentiments, and yeah, I'd be happy to agree with that.
We don't have the monthly chart with us this time, but we also mentioned in last week's interview that there have never been 3 consecutive months of gains, positive months in a classic bear market. And so what's been going on? I mean, it's not exactly May yet. I mean, for one thing, we're not at the end of May yet, but we're still a little off track.
Yes, so if that was the bottom, meaning that was the last major bear market, that was the bottom and that was the bull market, then I'm still secretly a proponent of a continuation rally. That means we'll end up somewhere up here above the last all-time high. That means the trend is continuing, and that was just, in quotes, a slightly larger correction. That could be confirmed by a third green month, namely May. We're really on the edge right now. March was in the black at 1.7. April 8 at 11.87, and May is currently still in the black by just under 1%. So if this week ends up in the black too, that would be great, because then we'd have a clear sign that we're still in a bull market. We'll see. Sunday is the last day of the month, and when the week ends, the month ends too. So in that sense, we have a clear cutoff point. And when we meet again next Tuesday, then
Let's find out more.
we know a lot more, yes.
We didn't include Bitcoin dominance in our slides recently. Today, however, you've brought it back on a weekly basis. That means there's some news.
Yeah, I just want to keep an eye on Bitcoin's dominance a bit more consistently now, because something might, hopefully perhaps, be happening. Maybe I'll start with a statement. That peak. Dominance always peaks before Bitcoin does. You can see that clearly in the last cycle. In other words, dominance peaked at this point before Bitcoin did. That's usually how it goes. In other words, we saw that too. It peaked first and Bitcoin peaked a little later. So far, so good. The moment the two tops were positioned accordingly, so one thing after another, and then came the descent. And as you can see here, its dominance dropped and Bitcoin's price fell as well. What does that mean? It means that the moment dominance drops and Bitcoin drops too, everything else naturally drops as well. When you think about it, that makes sense. And what happened next was that while Bitcoin was at its peak and then moved toward a second peak, its dominance fell, and during this phase, altcoins surged dramatically. That means he fell here. His dominance also waned. That means the altcoins moved accordingly, and then we saw this major sideways movement, which we hadn't really seen in previous cycles. And my hope now is that if Bitcoin rises accordingly, we are entering the crucial altcoin phase that we were actually supposed to have starting from here. And it's just all happening at a slightly different pace, relatively out of sync with the last wave in 2020 and 2021. And yeah, we know that 54 is the last high or low. If it drops below that, then we're definitely in altcoin season and we'll see an altcoin rally. Don't worry, even if the altcoins rally, Bitcoin can still keep rising. But, and this is the second point, while Bitcoin is rising, just as we'd like it to, the altcoins are simply rising faster and more intensely. And at the end of the day, that's what causes this downturn. That means the moment we could have, let's say, cut out this whole middle section here, then we'd be exactly where we were in the last cycle, and then it would all fit again. And I can imagine that essentially this second peak he had back then in conjunction with this movement is what we'll see now in conjunction with this movement. That's the hope, and we want to keep an eye on that over the next few weeks.
Over the next few minutes, we're going to take a look at 4 altcoins. 2 of them aren't making much headway, while the other 2 are performing exceptionally well. We'll start with the, well, somewhat sluggish investment options. Ethereum is currently anything but on the verge of a breakout.
Yes, we just saw with the dominance that we had reached the upper right corner of this channel and are now dipping slightly downward. For this slight dip to turn into a sharp decline, the major altcoins obviously need to perform well, because if they don't perform, if they don't take market share away from Bitcoin, then nothing will happen. And the 2 major altcoins are, after all, Ethereum and XRP. And if you look at Ethereum here, you can see exactly this sluggish sideways movement, which we also just saw in the dominance. When Bitcoin moves, Ethereum moves in tandem, so its market dominance actually remains exactly the same as before. It doesn't take anything away from Bitcoin, and while you can see this slight upward movement, you can also see that it's moving along the trend line, but how's it going? Joanna, we went into the final week, and that's exactly how we came out of it. Nothing has changed. We'll just have to wait and see. Ultimately, we're waiting for Bitcoin's signal. Will it go up or down? Depending on that, we'll see the corresponding movement here as well. Strong support at 1T500. We've had that in place for months now. It would be nice if it went up along with Bitcoin or down and then up. Those are the two options I see. The same goes here, Joanna. Bitcoin had a really bad week for spot Bitcoin ETFs, as I just described. And Ethereum also had a pretty bad week. Unlike Solana, we've got an inflow here, and the top performer from last week is once again XRP with an inflow of 22.04 millions of dollars. That's not a lot, but it's an inflow and goes against the overall trend. That means that while we're seeing a sideways movement here with a corresponding outflow, as we'll see in a moment, we're also seeing a sideways movement with XRP, slightly downward, but with a corresponding inflow. At the end of the day, this means that the supply, that is the available coins sitting on exchanges that can be bought, is decreasing, and that this reduced supply may soon meet increased demand, which will then cause prices to skyrocket.
You just mentioned that with the ETH ETF, there were massive outflows from XRP and inflows into it, but both are trading sideways. And you also mentioned here that this wedge pattern has formed, and in most cases, when the price has been moving sideways for what seems like an eternity and the range has been narrowing, it has led to a spectacular breakout, at least in the past. Is one imminent now?
That's a good question. I can't tell you either. I had drawn in the wedge. I had also said that I'm not a fan of these structures, but it just seemed like the right thing to do. You could see it spike briefly higher, you could see it go lower, and now it's really moving sideways in homeopathic tiny increments, even though the inflow into the spot XRP ETFs is actually quite strong relative to the volume. So from that perspective, we're in an absolute sideways trend. That's typical for XRP. Long, long sideways movement, long, long wait. Unlike ETH, it also tends to move more downward before it goes up. I've been repeating that same line for months now. Sideways, then slightly down, and then up. You'll see that in the coming days and weeks. Well, unfortunately, it has to be said that not much is happening these days. With the two major altcoins, ETH and XRP, they're completely in Bitcoin's wake and slipstream, which is why we see this dominance. Dominance is moving sideways, slightly upward, because Bitcoin is actually performing just a tiny bit better, even though XRP has outperformed Bitcoin over the last 2 years so far. So from that perspective, we'll have to keep an eye on things now. But fortunately, there are also other coins that aren't just drifting weakly to the side, but are really making waves. And we're talking about the daily chart here, just to be clear.
We'll take a look at those in a minute. You mentioned Ondo and Near, but first I'd like to know what kind of pet you brought along.
Yeah, I thought that was pretty interesting. I found it, or rather a community member sent it to us. So obviously YouTubers in the US are watching our videos too. And one of them brought up that example with Costellani's dog, the one we had last week. So the core business with the corresponding positive news, with the path forward that the little hair represents, and the price, which either runs ahead, is overpriced, or lags behind, is too cheap. They picked that up here and incorporated it into their own videos. And that's why I thought last week there was this discrepancy here between operations and price, and yes.
Let's move on to the good news. Ondo and Near. We already presented these in our model portfolio and in a model portfolio at Invest on April 18th. Both are coins included in this model portfolio, and here you can see some positive performance.
Yes, the heavyweights still need some work. The heavyweights, after all, we had allocated 30% to XRP in our model portfolio. They still need a little push to get going, but I think it's just a matter of time. The smaller ones in our model portfolio are already performing quite well, and we actually included Ondo a few weeks ago. That's why it's listed here on the left. We've had a performance going on here since April 18. As of today, well, a little over a month ago, it was at 64%. As you can see, we were already significantly higher, but then we saw a massive correction. I always say that these sharp upward movements are bound to be followed by a correction. It can't be any other way. And Ondo has caught up again by now. He's almost back to where he was here. Well, from that perspective, you can see the movement, and there's plenty of performance figures are in. Now, of course, we have to be fair to Ondo. Ondo has come all the way down from up there, formed a nice bottom here, then broken out, and is now moving upward. And those who have been following our model portfolio will already have seen some pretty good returns, at least as far as this coin is concerned. Bad news. One of the founders of this project passed away this week. It didn't really hurt the price that much, I guess, if the mastermind is suddenly no longer around. Just a quick side note on that. And then, of course, there's NEAR. Here again is April 18th, the blue line. And over the last 4 weeks, we're currently at over 100%. So a doubling of the investment within a month. That's not bad for a start. And we've also discussed on our channel how to potentially handle such developments and gains in your portfolio. So, in that regard, yes, Bitcoin is keeping an eye on what it's doing right now. ETH and XRP are lagging behind, watching to see what Bitcoin does. And in the meantime, the smaller coins are stepping up and making a little bit of history. But that makes sense. They're small coins with a small market cap. It doesn't take much capital on the buy side to drive the price up. But you also have to say, Joanna, that here at Ondo, we're talking about a true, which is why it's in our model portfolio, a top-tier coin in the real-world asset space, specifically when it comes to tokenization. And here at NEAR, we're talking about a top-tier coin in the AI and machine learning space. And when you think about NVIDIA and the entire AI sector, it's clear that a coin like this will naturally be pulled along on the upside.
Yeah, we don't have a roadmap this week. Nothing has really happened. You just said it yourself. Bitcoin, Ethereum, and XRP are just bobbing along. There's nothing to be seen right now that could, let's say, take us into the next phase of a roadmap. And it's exactly this sense of timing. It's a question that comes up again and again in our Crypto Insights channel and, of course, in the comments as well, when exactly this breakout will finally happen. The exact timing, we've discussed this quite a bit, is, of course, the absolute pinnacle of what we're trying to develop. You can't pinpoint the day or the week it will break out, but you can convey a certain sense of timing or how to navigate that sense of timing when the breakout actually happens. How do you do that?
Yes, those questions that come up, they are. And when the rollover happens, then we'll have, how much time will we have left? How fast is it falling? Will we get an update on the channel within the next hour? I'd just like to highlight the time frame involved in a rollover, a classic rollover. Let's take the Nasdaq rollover during the bursting of the dot-com bubble in 2000 and 2001 as an example. And then it should be clear that when I say this, we're going to enter a rollover. The coins will still have some time left to perform. This isn't something that will happen in just a few days or that will happen next week. And if I don't sell next week, then I'll have lost out. The time frame is much broader, as the example from that time shows. The foundation, in theory, this is the Wall Street cheat sheet. So this is the cheat sheet, the one about Wall Street. And here you can see it. Everyone here is familiar with this chart, which is why I just included a small version of it. Anyone can download it from Google using these 4 terms. You can see here how the Nasdaq followed a textbook pattern when the dot-com bubble burst. So it starts from the bottom and makes this massive move up here. We're just about to reach the top. The top was here, and that was the peak of the bull market. Absolute euphoria. The internet, telecommunications, and I had to get in on that. And then you'd look around. Which stock do I not have yet? Which stock do you have? How much of a percentage gain did you make? I have to buy that one too. So this euphoria was relentless, and you can see the steepness of the rise here, and then this happened, it crashed. Major correction, the higher low was followed by a lower low, just as we always discuss. What was the reasoning? Yeah, sure, with things getting overheated like that, we need to cool things down a bit, we need to make a correction. That makes perfect sense. Of course, I'm staying in the market because it's about to go up again, and it will go up again. But not above the previous all-time high, just into that range, which is why I plotted the retracements. That's the 1, that's the 0, and then it only goes up to 6.1.8 back in the year 2000. And so people tend to say at this point, well, of course, a recovery, it's going back up, and things will just keep going exactly as they have here. But that's not actually the case. It ends here, and after the higher high, a lower high forms. And this lower high is referred to here using a specific term. It's called a bull trap because the price doesn't go any higher. It falls, and then it really starts to drop. And then you see how a new low is formed on top of this low here, followed by another low and so on, gradually moving lower and lower until it reaches the bottom of the bear market, which was in October 2002, while this one here was in 2000. That means we're talking about a bear market that can last over 2 years. And that's why when I say we're heading into a rollover, we're heading into a recession, we're heading into a bear market, it's not something that's going to happen over the next 2 or 3 months. It can take a year or 2. That's the movement, that's the logic behind it. And if you look at the time frame from that top to that lower low, it was 161 days. In other words, the rollover from a higher high, the final top, to a lower high, took between 5 and 6 months back then. That means I don't necessarily have to act within a few minutes or hours. I actually have a little time. And there are basically 2 points at which you can get out. Either you get a sense that euphoria is building to such an extent that you say, oh, this is all getting a little scary for me. You get out at that point, or you try to wait for that moment. You look for the lower low, ride it up, and get out there. We missed the boat on Bitcoin. That's why we have to focus on this moment right now, because, well, I didn't really feel that euphoria around Bitcoin hitting 126. And as for market dominance, we saw that it wasn't really there either, because if it had been, we would have felt it, especially with the altcoins.
But if that were the case, if 126 were the peak, then this wouldn't be a relief rally if we're trying to get out of it here.
This is the relief rally. For now, we're talking about the Nasdaq and the rollover of a US index. It'll be something like that with the bid. If those are the 126, then they might be the 110s or 112s. And right now, it looks like the 76 and the 60 are on their way up together. But that's not what I wanted to talk about. Rather, it's about the Nasdaq, because the US indices are leading the way. That's the first stage in this whole development. And if you look at it now, the rollover of a US index, that's the picture we always paint, the symbol of the rollover. This rollover period is 161 days. The S&P rollover, in 2007, the major financial crisis lasted 226 days, so it was significantly longer. Mm-hmm. It's possible that things will move faster this time, but it certainly won't play out on that scale in 10, 20 or 30 days. Rather, this whole process will definitely take over 100 days. And in this phase, even in this phase, Johanna, when things go down here, you're actually still thinking positively because you figure it has to cool off, it'll find a bottom, and then it'll go back up. That means that in this yellow phase here, everything is actually still pretty positive. It only turns negative when the market starts to fall and you realize, oh no, this isn't going up, it's going down, and that's when fear sets in among investors. There are specific terms that accurately describe this downward trend, and the key point is, and this is where we make the connection to our cryptocurrencies. During this positive phase, which I've now experienced firsthand, this is the phase where our cryptocurrencies can really shine. Because at this point, the top performers are releasing liquidity, and that liquidity has to flow somewhere else. And just before we reach the peak, liquidity is already gradually being withdrawn and channeled into more attractive investments, such as risk-on assets. And that's also a reasonable time frame for the whole process to play out. And if I take a step back and go all the way back to the beginning, to Nasdaq, then I see us right here. That's where we are today. In other words, the final stretch on the way up before it enters the rollover phase, which could take quite some time. And if you take a look at that and view it against the backdrop of this election year with the midterms, then time-wise, everything should work out just fine.
Thank you for the information today. We'll be back next Tuesday. By then, May will be over and we might see a third green candle on Bitcoin's monthly chart. Thank you very much for today, Oliver. And of course, thank you to all of you watching. If you enjoyed the show, please give us a like. We'd appreciate that just as much as we'd appreciate seeing you back here next Tuesday.